Investing Made Easy, a beginner's guide to growing your wealth. In today's world, financial worry is a common struggle. It can feel like you're constantly one step behind, unable to build a secure future for yourself and your loved ones. But what if I told you there's a way to take control of your financial destiny, break free from the cycle of just getting by? Welcome to JI Insights, your source for clear, actionable investing information. Today, we're talking about investing, a powerful tool accessible to anyone ready to break free from financial worry and create the life they deserve. Let's dive in. Maybe you're concerned about the complexity of investing, worried it's only for the wealthy. Perhaps the risks involved scare you, or you don't know where to even begin. We get it. By the end of this video, you'll be equipped with the knowledge and resources to take your first steps towards a brighter financial future. Stay tuned. Throughout this video, we'll address these common concerns head-on. Section 1. Invest in your future. The power of investing. The world economy is constantly evolving, and investing allows you to participate in that growth. While markets can fluctuate, history shows that investing has the potential to significantly outpace traditional savings methods over the long term. Inflation is a global concern, eroding the purchasing power of your money in the bank. Investing can be a way to combat inflation and make your money work harder for you. Section 2. Busting investing myths. Breaking barrier through more awareness. Let's clear the air. Investing is often shrouded in mystery, filled with fancy terms and complicated charts. No wonder so many people feel intimidated. But here's the thing. Most of the common myths about investing are simply not true. Myth number 1. You need a ton of money to start. Absolutely not. Many platforms now let you invest with as little as you can afford to set aside regularly. It's all about starting small and building a habit. Myth number 2. You have to be a stock market genius glued to your phone. Relax, you don't need to be day trading. There are plenty of long-term strategies that require minimal effort. Finally, myth 3. Investing is super risky. Yes, there is always some risk involved, but that risk can be managed through diversification, spreading your investments across different asset classes and sectors within the global market. Think of it like packing for a trip. You wouldn't bring only one outfit. Diversification helps ensure you're prepared for different market conditions. Section 3. Investment Lingo. Made Easy. Investment ABCs. Stocks, bonds, and funds explained. Okay, so we've established that investing is accessible and doesn't have to be scary. But before we jump in, let's break down some key concepts in greater depth. Stocks. When you buy a stock on a major exchange like the NYSE or NASDAQ, in context to US, and NSE or BSE, in context to India, you're essentially buying a tiny piece of ownership in a company like Apple, Microsoft, or Reliance, HDFC. If the company does well, the stock price typically goes up, and you can potentially sell it for a profit later. Bonds. These are like loans you make to companies or governments. You give them money, they pay you regular interest. Bonds are generally steadier than stocks, but the potential for high growth is less. They offer stability in your portfolio. Mutual funds and ETFs. These are like baskets of stocks or bonds, expertly put together by professionals. Instant diversification with one purchase. Great way to manage risk and tap into different sectors of the global economy. Some funds track major indexes like the S&P 500 in US context or Nifty 50 in India context, letting you bet on the broader market's growth. Section 4. Find your investing style. Risk or relax. Choose your investing path. Investing isn't one size fits all. Are you comfortable with some ups and downs for potentially higher returns? Or do you prefer a slower, steadier approach? Younger investors might handle more risk since they have a longer time horizon for their money to recover from any market dips. Also, think about how soon do you need your invested money. Saving for a house down payment in a few years is a near-term goal, unlike investing for retirement, which is decades away. Your timeline dictates which strategies are best. So far excited about global tech trends? There are sector-specific funds focused on technology companies across the world. Believe in sustainable energy? There are funds aligned with those values. Investing in areas you're passionate about can be extra motivating. Section 5. Take action. From thinking to investing. Get started today. Your first steps. Made easy. The how of investing is less intimidating than you think. Here's your action plan. Choose a brokerage. Consider popular platforms, compare their fees, and look at the range of investments they offer. Do they have good educational resources for beginners? Start small. Consistency is key. Look for options with low minimum investments. Even a small amount invested regularly adds up over time. Focus on the long term. Markets fluctuate in the short term, but history shows a long-term growth trend. Don't panic sell if there's a dip. Learn as you go. JI Insights is here for you. Subscribe and stay tuned as we dive deeper into specific strategies, fund analysis, and building a balanced portfolio in this video and future videos on this channel. Section 6. Smart investment strategies for all. Grow your wealth confidently. Now let's get into specific strategies that make sense for beginners regardless of location. Averaged purchase strategy. This simple strategy involves investing a fixed amount regularly into a chosen fund, ETF, or stock. It averages out your costs over time, reducing the stress of market swings. Perfect for those who want a set-and-forget approach. Index funds. Bet on the broader global market's growth rather than picking individual stocks. Index funds tracking major players like the S&P 500 US or FTSE 100 UK or Nifty 50 India are excellent for beginners due to their built-in diversification and low fees. Sector focus. If you have knowledge or strong interest in a particular sector of the global economy, tech, healthcare, energy, there are sector-specific funds. However, these carry slightly higher risk due to less diversification. Dividend stocks. These are well-established companies that regularly pay out a portion of their profits to shareholders, investors. They provide regular income on top of any potential increase in the stock price itself. Think of globally recognized brands with steady revenue streams. Hybrid funds. These offer a mix of stocks and bonds, balancing out risk and return. A good option if you're moderately risk-averse, but want some growth potential beyond bonds alone. To sum up this video, do remember the most successful investors started somewhere with a desire to create a better future for themselves. This is your starting line. Investing in the global market has the potential to transform your life. It's about securing your future, achieving your dreams, and participating in the world's exciting trajectory of growth. Keep learning, stay focused, and let's build a brighter financial future together. If you found this video helpful, be sure to like, subscribe to JI Insights, and share it to empower others.